Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Megan Brantley. She's the Vice President of Research at LikeFolio. Welcome back to the show, Megan. Thanks for having me, guys. Perfect timing. Costco. I mean, over the last 2.5, maybe 2 years, this has just been if it's down at all, just buy it because the stock continues to move higher. Their numbers, they report monthly sales numbers, so we get more clarity on that. But this seems like something that just works, Megan. Do you have the data that backs up the fact that, hey, now that they've raised prices, this is even going to be better for Costco shareholders?
Yeah, I think that you hit on a lot of really good points there. First of all, just to kick off, Costco is one of those that does report those monthly sales numbers. So heading into this, we lose a little bit of our edge there because, they beat us to the chase. And so we know somewhat what to expect out of Costco. But what we don't know, kind of in what we look at heading into this earning event, is that retention rate for those memberships, like you talked about, Costco did raise its prices for the first time in 7 years. And so we can ask, okay, how is that factoring into the business? Are there any signs of cancellation? Are people still joining at the rate that they were before? And when we look at this just from consumer searches, we don't see any signs of trouble or any signs of resistance from that price increase. If anything, we see a bit of an uptick. And when we look at cancellation mentions, those are practically non-existent. I think Costco has one of the highest retention rates for subscriptions. And a lot of the companies that we track, I think last quarter it had a 93% renewal rate in North America, which is pretty impressive. And so this is a company that clearly has pricing power. Whenever we look at this visits chart, I think this is interesting. We have Costco up by 4% year over year. I will say that this is actually an improvement from where we were a month ago. And I think that that's important because that could be a potential nod to guidance. That's kind of the only gray area that we really don't know. And if you were to look at this a month ago, that Costco bar would have only been up by 1%. And so I think that that's a potential, green flag for the company that we're starting to see some acceleration there with back to school and even heading into an early holiday shopping season. We do have Sam's Club higher on that chart in terms of growth rate, but this really isn't surprising because when you look at the overall visit market share of these players that you see on that chart, Costco is commanding nearly 64% of all web visits. Sam's Club is less than half that. So, this company obviously has a ways to go to catch up to a Costco. So I guess overall, whenever we look at things, we don't have as much of an edge, but we do see some signs of improvement in terms of guidance with an uptick in those web visits. And we do not see any red flags when it comes to, cancellations or things like that after a pricing increase in its membership.
Megan, this is a tricky one because everyone that goes to Costco loves Costco. And their net sales growth, 7.5% in June, 7.1% in July, 7.1% in August. Consistent, growing. But Megan, here's the problem. This company is priced like it's a .com company in the middle of the .com bubble. The valuation is extremely high for a company growing in mid-single digits that's a mature retailer. And so as good as it is, as much as I love it, isn't it at some point, I've said this on this show before, at some point I want to be long it, at some point I want to be short it, no matter what company it is. Can you afford Costco up here? Because the prices in store might be cheap, but the price of the stock is Neiman Marcus.
Yeah, I think that if you look at its PE, what it's in the 50s, and historically speaking, it's usually closer in the 30s. And so definitely valuations are really high for this name. And that's really the only red flag that we see going into this is, has the stock gotten a little bit ahead of itself? But on the consumer front, and as far as consumers are concerned, this company is only becoming more attractive in the eyes of consumers. It's got really high levels of consumer happiness. Consumers, this is almost like how we used to talk about Target, how consumers get excited to make a Costco trip. They plan their weekend around it. They're actually excited to go shop and spend money. It's part of the treasure hunt experience that Costco provides. And I don't know about you guys, if you're Costco members or if you've been to a Costco recently, but every time I go to Costco, man, it's more crowded than I've ever seen it. And I think that that's also reflected in our data. So it really just comes down to, valuation, like you guys mentioned, and where the market's real expectations are, if there's any number that Costco could put out that would send shares even higher.
Yeah, it's like a TSA pre-check. It just keeps getting, it's almost longer than the regular lines now because everybody's going to Costco because of the inflationary pressures. You can buy in bulk. I get that part of it. But Megan, when you look at this, Kevin talked about the valuations, the stock price just below all-time highs. What's your earnings score on this one? I'm curious to figure this one out.
So for this one, we would officially be neutral, partially because they do release those numbers early. So we already have a pretty good picture of what we would expect the company to report. I would say, though, stock aside, if we were just looking purely at these metrics, our metrics do support a cautiously bullish lean. This would be one of those scenarios where if we do see a pullback in the stock, as Kevin mentioned earlier, we would be definitely buyers in the long run. We think that, in a couple of years, the stock could definitely be higher than it is right now.
Yeah, I think that's been the mantra over the last couple of years, buy on dips, because it's done well in that type of strategy. All right, great stuff. As always, Megan, thank you.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at LikeFolio, breaking down the data. And Kevin, one item of note